Good day, everyone. On behalf of our group, I am Mike Capras, and I would like to share with you about some information about the company that we've been working on throughout this course. Power Corporation of Canada is a multinational management and holding company founded in Montreal in 1984. As recorded in its 2022 annual report, the company has 2.7 trillion Canadian dollar asset under administration. The company focuses on financial services in North America, Europe, and Asia. Power Corp owns and operates a diversified portfolio of various investment services, insurance, asset management firms, and alternative assets worldwide. Here are the main businesses that they've been owned or that they are owning. So, Great West or Lifeco Incorporation, primarily an insurance and retirement company. In 2022, they generated about 3.6 billion Canadian dollar in net earnings. The company aims to expand access to advice-based insurance, wealth management, retirement, and wellness solution. IGM Financial, a wealth and asset management firm with reported net earnings of approximately 867 million Canadian dollar, has driven a strong performance in wealth management and increased earning from strategic investment, which has enhanced its growth profile and extended its capabilities. GBL. It is an investment firm mainly focusing on Europe, and they had 416 earnings in 2022. With its strong balance sheet, the company continues to transition to fast-growing private asset with GBL Capital and Sienna Investment Managers. They returned about one 1 billion Canadian dollar to shareholders, including 643 million Canadian dollar of share buybacks in 2022. Apart from this primary business, they also own and operate several alternative investment firms like Sagard, an international asset management companies that earned 18.5 billion Canadian dollar in 2022. And another one is Power Sustainable, which primarily invests in renewable energy and green structures and generate about 3.3 billion last year. Power Corporation is committed to creating value by implementing various strategies such as simplifying its structure, building alternative asset investment platform using non-power capital, monetizing other assets and returning capital to shareholders, and additionally, the company emphasizes also clear communication to its objectives, strategies, and performance to all stakeholders. In order to generate additional income, they aim to monetize the current asset or their current asset or sell the asset that they have been measured as much as possible. For example, as you can see in this table, in January 2022, Power Corporation of Canada sold its 13.9 ownership stake in China Asset Management and plan to use this money or these proceeds to buy more shares to another company from IGM. This transaction is part of their strategy to simplify and streamline its corporate structure while delivering its value to its shareholders. So let's look on their financial statement. So looking on this Power Corporation's financial statement for 2022, it shows that the company revenue, expenses, and income before tax were all significantly lower than the previous year. So as you can see in this three comparison, this indicates that the company sold fewer product or services in 2022. That's than the previous year. However, the decrease in expenses indicates that the company was able to reduce its operational costs in 2022. In addition, Power Corporation cash flow shows that the company operating cash flow decreased in 2022 compared to the previous years, this indicating that the company made less money from its main business activities. However, the investing cash flow increased in 2022, indicating that the company spent less money on buying long-term assets or received more money from selling them. The financial cash flows in 2022 remained similar to 2021, resulting in negative cash flows. And the capital expenditure increased in 2022, meaning that the company spent more money on buying or improving its fixed asset. Lastly, the free cash flow decreased in 2022, indicating that the company had less cash left after paying the operating and investing activities. So we're going to take off on that. Does Power Corp consistent with their goal? They are well positioned to serve the client and stakeholders um, amidst of uncertain market condition. They actively manage business and investment to enhance shareholder value. Power Corporation remained dedicated to environment, people, and business decisions during the pandemic. They minimized the risks related to environmental, social issues, and demonstrating their responsibilities, taking extra care or extra measures to ensure the safety of their employees and communities. With this good record and rating in commitment to global initiatives, they set as a good example for other companies, providing that responsibility is crucial even though in challenging times. So Power Corp implemented its ESG compliance or these ESG initiatives to conduct their business operations in the way that they do not harm the planet with while taking care their people or they're taking care of other people. They invest in renewable energy sources and contributed to the environment through the Nature Conservancy Canada and other group. So during the pandemic, they care for their employees' safety and well-being and donated to the local charitable communities with 44 million. The company also involved in various community initiatives that support social and environment causes, such as building the community capacity, promoting community well-being, supporting indigenous communities, visibility or visible minorities, newcomers, and and investing in the voluntary sectors and social entrepreneurs. The company has a long and corporate citizenship and philanthropy. Power Corp's committed to sustainability and responsible business practices guides the company's values and vision. They value strong corporate governance. The board oversees strategies, operations, disclosures, and compensation with four committees managing specific functions. They follow Canadian Security Administrators guidelines for fairness and transparency. But they go beyond their compliance. They go beyond compliance by practicing customized governance. They prioritize substance over generic process, ensuring decision has been meaningful purpose and real impact. With flexible and adaptable approach, Power Corp recognized that different countries, cultures, and situation requires different strategies. Moving on, so let's discuss their current stack and their dividend standing. Power Corporation pays generously dividend of 2.1 or Canadian dollar per share annually, which translate to a dividend yield of 5.62% based on the last trade price of 37.36 as of November 24. This is higher than the average dividend yield of the TSX Composite Index, which is around 3%. Power Corp has a strong history of paying out and growing its dividend year over year, making it reliable income for stack or reliable income stack for investor. As you can see in this graph or in this table, the dividend per stock or per share of Power Corporation has increased steadily year over year from 2015 to 2020. The company increased its dividend per share by an impressive compound annual growth of 10.64%, reaching a peak of 2.2 Canadian dollar in 2020. Despite a temporary decline in 2021 due to the pandemic, the company resumed its dividend growth in 2022 and maintained its current dividend per share of 2.1, which is higher than the previous year by 6.0%. Power Corporation pays dividend quarterly and usually in the month of February, May, August, and November. They also buy back company shares, which will increase the company shareholders, which is good for company shareholders because it the returns which increased shareholders returned even more. In our opinion, investing in Power Corporation is not a risky investment due to companies' valuation. They diversified their portfolio to the upcoming financial environment, which is good for insurance businesses and a reasonable payout ratio. As you can see in this graph or in this table, that they also have a low debt to asset ratio and a good amount of cash available on their balance sheet. As another matrix, if you look at the net asset value of Power Corp, you can see it over time that there is a tight price discount on the net asset value that has been narrowing significantly. Even though it's been narrowing, there is still 25% discount to the net asset value, which give the investor a margin, the safety when investing in this business as they buy it for cheap. The conservative payout ratio, we believe that the dividend is also pretty safe and there's a minimal risk in investing in this business. So let's think about this. If we have 10,000 Canadian dollar, would investing in Power Corporation will be a good choice? Let's look at the last 30 days. So as we see the significant growth of Power Corporation stock price, according to the historical data, the stock price increased from 32.7 in October to 37.68 as of November 24. which is a 7.66% increase. They also reached its 52 weeks high of 38.98 on November 17 and has forward dividend yield of 5.67% and a price to earning ratio of 10.55. This means that the current market price of one shares of the company stock is 10.55 times of its earning per share. We highly recommend investing in Power Corporation for its long-term value and potential income. We suggest investing the 10,000 to purchase a 267 shares in the current trading price of 37.36 per share. We have forecasted an estimated earning for 5 years, which generated approximately of 5,536.86 Canadian dollar. This is the difference between your initial investment of 10,000 from the beginning and your total value. You'll gain a total value, or you will earn a total value of 15,532 by the end of 2027. This represents an impressive return on investment of 55.33% over 5 years, or an annualized ROI of 9.21%. So a positive ROI indicates that the investment has generated more value or more profit than your initial investment, or that than your initial cost. We check also a forecast based on analysis prediction. So according to the Deep Ranks Finance, the company shares will rise an approximately $44 per stock or per shares by 2024, which will be really a good indication for you as an investor because you will gain more money. Then this, so Par Corporation, as we have learned from this, have been consistently growing year after year. This growth indicates that a positive outlook of the company's future growth, development, and operation. As the company diversified portfolio for business and investment is the key factors for this growth. And it is expected to continue to be leveraged for further expansion. As a result, Power Corporation is well positioned to capitalize on new opportunities, which further enhance its outlook for future growth. Thank you for watching, and let us know if you have any questions.
We are an international management and holding company focusing on the financial services sector, investing in leading franchises with attractive growth profiles. With a long-term and prudent approach to investing, we are guided by key core values and pursue a value creation strategy rooted in responsible management. It's how we create sustainable value for our shareholders, drive solid growth for promising businesses, and contribute positively to the communities we live in. These commitments are shared across our group companies. As an employer, active long-term shareholder, and corporate citizen, it's our way of making a positive impact on everyday life. It's how we do business.